Hello, thank you for joining us today for this short video brought to you by FHA Mortgage Source. Today we're going to talk a little bit about the latest changes for 2016. We're going to highlight some of the basic requirements of FHA, what home buyers want to know, and again highlight some important changes that have happened. If you have questions, we service buyers in all 50 states. You can reach out to us by calling 904-302-6060 or visiting FHAMortgageSource.com. First, just a quick rundown on the basics of the FHA program. The program requires a minimum 3.5% down payment is required. That's the big draw to the program, is many first-time home buyers especially are looking for home buying solutions that do not require large down payments, and FHA certainly meets that need. Home buyers are again required to put down a minimum of 3.5%, but that can come in the form as a gift from a family member. In addition to that, buyers are permitted to put down more money if they choose to. Closing costs for the FHA loans, it can be paid by the home seller up to 6%, which is generally more than enough to cover all of the buyer's closing costs and prepaid escrow requirements for taxes and homeowners insurance. FHA, like all government loan programs, it does have a one-time mortgage insurance fee that can be rolled into the loan. For FHA, for 2016, it's 1.75% of the loan amount. That one time, and it's called, depending on the program, the government program, it has different names, but it's basically the same thing. It can be called a guarantee fee or a funding fee if you're talking about the USDA or VA program, but it's all basically the same thing. It's a one-time fee that is rolled into the borrower's loan. They can also pay that out of pocket, though, if they choose. FHA, of course, is government-backed, government-insured program. No early payoff penalties or prepayment penalties. Home buyers can pay off their loan anytime they choose. In most cases, a 620 credit score will be required for the maximum 96.5% financing. Borrowers that are putting down 5% or maybe a 10% down payment will have more flexibility in regards to the credit scores. Those borrowers that do have a 5 or 10% down payment may be able to obtain approval with a 580 or 600 credit score. Do keep in mind that the credit score requirements alone does not guarantee loan approval, as there will be additional stipulations in place for any applicants that have had a serious financial hardship, like a bankruptcy or foreclosure, home foreclosure, or a short sale. There will be additional requirements in place in regards to waiting time, regardless of how high your credit score may be. FHA loans can be used for any single-family home, townhome, or approved condominium. As long as the home meets all the safety standards for HUD, the home basically is in a move-in condition. The homes aren't required to be perfect. Rarely are any homes perfect, but they do need to meet just basic safety standards in order to be able to get financing. Just a couple other things. Non-occupying co-signers are allowed with an FHA loan. Maybe a first-time home buyer has good credit and a good job history, but just not enough income to qualify for what they're looking to purchase. In that case, if they have a co-signer like a parent, even if they're not occupying the home, that is still permitted with FHA. FHA offers secure fixed rate terms, 30-year, 15-year fixed, and low cash reserve requirements compared to most conventional loan programs. FHA is a nice option for first-time home buyers that have little money saved up. You're not required to have a lot of savings in place like many conventional loans require, or reserves is what they call that. This is a quick chart of the new FHA mortgage insurance premiums. It recently did change, and this is the updated formulation. The this is the monthly mortgage insurance cost. Now people get confused. FHA will have two things. There's going to be an upfront mortgage insurance premium, typically 1.75%, that will be rolled into the loan. That is from the start. In addition to that, there will be a monthly premium that is charged, and it's a part of the home buyer's monthly mortgage payment. It's included in the payment, just like taxes and homeowners insurance would be. Most people know that term as PMI, or private mortgage insurance. It's all, again, basically the same thing, but FHA will require the mortgage insurance to be paid monthly, and the amount will depend on the loan amount. The loan to value will determine that. Most borrowers will be at the over 95% with loan amounts under the 625.5. So again, the large majority, I would say 85% or more borrowers would be at that 85 bps rate for the mortgage insurance. This can be confusing on how to figure this out in the formulation. If you have any questions, again, we just encourage you to call us and we can go over and tell you exactly how much the one-time mortgage insurance cost would be, and then what the one-time premium would be, so you can help figure out the actual real cost. Here's some important changes. There's been some changes to FHA in regards to student loans, and this is an important one that anyone that has any student loan debt will want to pay attention to it. In the past, FHA has been really good in regards to student loans, in the fact that if an applicant has a student loan reporting on their credit report, and if that student loan was in deferment for at least the next year, FHA would permit that debt be excluded from qualifying. That was good in the fact that applicants could potentially qualify for more. FHA has recently changed that rule, and now underwriters will no longer be able to exclude monthly student loan payments in regards to qualifying in debt-to-income ratios. So this is something to take note of. USDA is another government loan, and they have always done this. Now FHA is doing it. So basically, if there is no monthly payment reported for the student loan that's in deferment, lenders will use 2% of the loan balance for the monthly payment. And again, what does this mean? Pre-qualified amounts could be much less for the home buyer that has significant student loan debt. If you have any questions regarding this and how it would be calculated and affect your qualifying, again, please reach out to us. Just a few highlights on the FHA loan application. The process is very simple. Oftentimes it's done over the phone in just minutes. The applicants will want to make sure really there's just a couple of key pieces of information, and most of the information you're going to know by heart. Income, asset documentation, pay stubs, tax returns, bank statements. Those will be items really, your identification in addition to that. Those would be things you want to make a copy of. But during the application process, for your initial application, you just need to know really the information at hand. Know what your income is. Know the name and address of your employer. Your past 2 years of employment. Your past 2 years of living history, addresses, and then the basic things that, of course, you already know. Your date of birth, your social security number, things like that. Know your basic bank account information, how much money approximately you have in each account. Any retirement accounts like a 401k or IRA, it's a good idea to get one of those statements and know where those accounts stand as well for qualifying. Again, the process is very quick. Oftentimes the application can be done in 10 minutes, and you can have your letter of pre-approval in the same day, and then be out shopping for a home. Borrowers do want to make sure, though, that they get pre-approved for financing before shopping for a home. Many home sellers and realtors alike will often require that. Again, if you have questions about the application process or getting your FHA loan pre-approval, reach out to us at FHAMortgageSource.com. Thank you for viewing this video today. Again, if you have questions, please call us at 904-302-6060, 7 days a week. We serve home buyers in all 50 states across the nation. We look forward to assisting you.